Hey everyone, and welcome to another video on the Joan Wick channel. And today I'm going to go over order blocks. If you remember that order blocks fall under our internal range liquidity. And so what are order blocks exactly? So order blocks are areas where large institutional orders will place and act as a point of interest for price to revisit before launching. So when price forms an opposing move, as you see in this diagram, before a sharp continuation, it creates what is called an order block, and they're usually found at the base of a swing. So what does that mean? So when we see this bearish trend, what's happening is that large institutions are placing their orders, and so this order block is formed. And what happens is, after price takes liquidity, it will then seek liquidity in the opposite direction, and so this order block represents orders that have not yet been filled. So price comes in, fills in those orders, takes that liquidity, and that allows price to continue its direction. It's now got a bunch of sell orders that it's now filled, that allows price to now continue bearish. Same here with this bullish examples. Price created this order block here. That's a sign that institutional orders were placed. Everybody placed their buy orders here. So after price retraces into this order block and fills in all these buy orders so that price can continue in its direction bullish with all that buying orders and with bullish momentum. So how do we see order blocks in candle formation? So, order blocks are seen as a single or series of opposing candles, and we measure them not using the wicks but the top and bottom of the candle bodies. So if you see this in this example, we're using the whole series of candles as our order block. Price comes down, retraces, taps into that order block, and continues the bullish direction. And in this bearish example, we just have our one opposing candle, and so price taps into that, respects it, and continues the bearish momentum. So how do we see and spot that on the charts? Let me show you in this example. We start from this sell side and buy side liquidity. We're just following price movement at the moment. And I'll show you how order blocks are used. So an order block is the last bullish or bearish candle or series of candles before a continuation or reversal. So this is measured from the bodies, not the wicks, and we see price respecting that order block and continuing its bullish direction. So if you follow price after this order block was made, we broke past our buy side liquidity, displaced, came back down, made this swing high. We made some more swing highs. Then price comes down, retraces into that order block. We see some rejection and reaction, and that's when we enter after we see some sort of reaction, you could say there. And we put our stop loss where? Just below this order block. And where would we target? Our first target would be that swing high. And so you see we hit that target buy side. And if you continue, this will be our new sell side, minus sell side. You can see price goes up, creates another swing high. In other words, buy side liquidity. We come down, we tap into that order block again. We also brush past our minus sell side liquidity and reject, meaning we are still going to continue our direction, as well as rejecting this order block, meaning that we are going to continue this trend, Because why? Our order blocks act as almost our last line of defense. If you see that price closes past your order block, it is most likely that you've got the wrong direction. So for example, you missed this initial entry. You'll have to wait for price to retrace again, have a reaction, still placing your stop loss below this low or below the order block. And where would be target buy side liquidity, because why? We just swept our sell side. And if we use our standard deviation measuring tool, which I will teach in another video, we can see that we can also target our 2 standard deviations and would still make a nice profit. That would be a nice almost 1 to 3.5. That would be a nice 1 to 2. But as you can see, that's how we would use our order blocks. So I think that's self-explanatory. I will obviously go into more depth at some point when we go into more advanced market structure. But for now, that is it on order blocks. I will see you in the next video.